Listen to me. The wealthiest people in the world don't work for their money because they've unlocked a glitch in the system that allows them to print money on demand. So today, I'm going to show you how you can replicate the wealthiest people's exact steps and make money work for you. How? By learning how to actually invest your money correctly. And listen, no, I'm not talking about some shady options trading or pumping shitcoins. I'm going to teach you how to get started with investing as a complete beginner and how to actually invest correctly based on how much money you currently have. And let me tell you this right away, if you have less than $11,000, you should not be investing in the way that everyone else tells you to. That means no stocks, no shares, no crypto, nothing like that. You need to be doing something completely different that will 100 times your money over time, and we're going to get into that in just a moment. But first, what is investing? I mean, think of it this way. In its most simple form, investing is simply allowing your money to work for you and make you more money. It's about paying $10 for something today because you have a good reason to believe that you'll be able to sell it for $20 down the line. And today, we're going to cover the 5 stages of your investment journey and exactly what to do at each stage to maximize your return on investment. Because regardless of your income level or how much money you have, everyone should be investing. But not everyone should be investing in the same things or asset classes. So, what are the 5 stages of investing? Now, stage 1 is when you have $11,000 or less to your name and no cash flow. Stage 2 is when you haven't saved much but you're making $1,000 or a few thousand per month. Stage 3 is when you have $10,000 to your name or you're making $4,000 to $5,000 a month. Stage 4, and this is really where things get interesting because you can really let your money work for you. Stage 4 is when you either have a high-paying job or a business that generates you 5 figures per month, and that recurring revenue allows you to take on greater risk. And that's when you can really begin to grow your net worth. Now, stage 5 is only going to be relevant for a small subsection of you, but if you internalize and apply everything from stage 1 to 4, there's no reason why you can't get there. Now, stage 5 is where we're going to discuss how to protect your wealth once you have it. And stage 5 is how the richest and wealthiest people in the world are able to print their money on demand. Now, mind you, this is not financial advice. These are simply my personal opinions and my personal framework on investing. So, the most common question I get is, how should I invest my money if I only have $11,000 to my name? And this is stage 1 of the 5-stage matrix. And here, I just have to be brutally honest with you because if you only have $1,000 or less and zero cash flow, then you should not be focused on traditional investing. Now, what do I mean when I say traditional investing? And to keep things really simple for the sake of this video, we're going to focus on 4 different investment types. In the realm of investment vehicles, the first type we'll discuss is shares. Think of buying shares as basically purchasing a tiny piece of any publicly traded company. The second type is index funds. Now, index funds and ETFs are very similar. Think of them like sort of a basket of a lot of different companies. So, when you invest in one index fund or one ETF, you basically invest a little bit in all of those companies in the basket. For example, when you buy SPY, one of the most common ETFs in the US, you're basically buying a little bit of the top 500 biggest companies in the US, known as the S&P 500. The percentage you buy of each company depends on their market cap and their weighting inside of the S&P 500, but you can also have ETFs and index funds for different sectors like silicon or green tech. Now, the third type of investing we're going to talk about here is bonds, and there's really 2 types of bonds, government and corporate bonds. Now, bonds are essentially a form of debt where you, as the purchaser of the debt, get a certain percentage interest on the bond, known as a coupon. To make things even simpler, with government and company bonds, you're basically giving them money, they're giving you a percentage of interest, and then at the end of that term, they're also giving you your full amount back. So basically, it's like a loan to a company or government, to make things really, really simple. And the last is crypto. And I'm sure you are all familiar with crypto, but if you're not, you can just think of it as another asset class that's more risky and less regulated. With stage 2, we're addressing those who have some savings and are making a few thousand per month. As long as you have some income that you can put aside to invest, well then, you're in stage 2. It doesn't matter if you live at home and can invest all your earnings, or if you can only invest $100 per month. That doesn't matter. Here in stage 2, we're not looking to get rich quickly. The main thing here is we're looking to build those habits that will set your financial foundations. And on a long enough time frame, I guarantee that you become a millionaire. How? Because of the power of compound interest. Listen, it's crazy. Long-term investing allows basically anyone to become a millionaire. And by the way, I'm talking about 30 or 40 years to become a millionaire. I don't want it to take that long for you. I want you to do it in 10 years. I want you to do it in 5 years. I want you to do it in 3 years or even in a year. But the point is, even if you do it in a year, but you don't develop these good habits, you're just going to lose it all. So you need to think long-term. You need to plan long-term. You need to start acting like you're building long-term wealth today. And then try to get rich quicker. Try to make more money in your business, in your career, to put those into your investments and build your long-term wealth. So yes, pretty much anyone can invest, and if they do it for long enough, they'll become a millionaire. I want to make that very clear to you, but of course we're trying to do it quicker than that. But anyways, before you begin investing, growth and expansion is very similar to stage 2, but now you're making some more money. However, you still need to be smart and shouldn't take too much risk. Really, stage 3 is about solidifying the habits from stage 2 and learning to put more aside to invest. So, as I said, to get to stage 3, you basically just do the same thing as you did in stage 2, except you just increase how much money you're putting in. Everyone has different amounts that mean nothing to them. For some people, $100 a week is too much, so they can only do $50 a week, and that's an amount where they don't even know it's gone. For some people, it's $1,000 a week, for some it's $10,000 a week, for some it's $100,000 a week, and they don't even know it's gone. So listen, it all depends on your stage, but remember what I said, you are your biggest asset. Okay, so you go focus on making more money, bigger career, all the stuff. Go invest in learning skills that will make you more money, and then, as you increase your value as an asset, then go diversify. And as I said, keep investing into the markets, but obviously now that you have more money, that means that you can put more into the markets. And that's really all stage 3 is. It's just the same as stage 2, but take it up a notch. Now stage 4 is where it gets a little bit more interesting, and this is when you're making 5 figures per month and have some spare money to invest. At this stage, you can take on more risk because you have your business that is generating you cash flow. So listen, at this stage, you can start investing in crypto. I'll be honest, I put $1 million into crypto in November of 2020. I literally just had $1 million sitting in one of my accounts, not even earning me interest. I put it into Bitcoin and then split it up into Ethereum very shortly thereafter. And I mean, the rest is history. I'm no genius, but I can tell you, at some point, it's a funny story. I literally even had on my YouTube, I had my $7 million crypto portfolio, and then I make a joke that, hey, next week it might be worth half. I don't know, and then the next week it was literally worth half. I mean, it went from 7 to 4 or something like that, and at that point, I held for another 6 to 8 months, and then I ended up just selling all of it. And these days, I don't invest big into crypto because I'm more at stage 5 and stage 6 that I'm not even going to talk about here, where I'm just all about preserving my wealth with boring fixed income assets, the market's very safe, AA grade properties. I'm talking places like central London, central New York. Properties are not going to double, but it's just safe. They're always going to be in demand. I've got my more boring investments there, and then when I want to take on more risk, I have my property projects. I'm in the process of buying a hotel at the moment. This week alone, I'm investing in 2 software companies and buying the largest equity stake, except for, obviously, the founders. Let me put it this way, the largest investor into 2 software companies this week, and those are the riskier investments. So, in stage 4, crypto was something that I did. These days I'm not as into, but if you want to, at stage 4, you can start to do that. You can also begin to pick your individual stocks. This is something that I personally have never done, but I have many friends that it's worked out for. They have the time to sit and look into companies and decide which one's the right one, which one's not. Listen, I own many companies. I don't have time to look at the financials and look at the reports in there because I would much rather do that for my own companies. But as I said, in stage 4, you can begin to really do this. But if you are going to pick your individual stocks, as I said, you need to do your fundamental research into companies. You need to look at their balance sheets, and you need to look at their income statements. You need to really dig into the fundamentals of the companies and pick a few that you like. Now, of course, you're going to keep doing everything you've been doing in the previous stages, but you can also experiment with crypto and other more volatile asset classes. Now listen, the richest people on earth, they don't make their money off their salaries. They actually get it in stock. If you look at Sundar, who's the leadership at Alphabet, his salary is $2 million a year, yet his total compensation is $226 million. Or Netflix co-CEO Reed Hastings, he has a very interesting book, by the way, he's on a $650,000 salary, but his total compensation was $40 million. So the reason I said that is just there's levels to the game. And understand that equity in businesses and ownership in businesses, even if it's a tiny amount, can mean a lot later down the line. Now, stage 5, as I said, there's actually a stage 6, but I'm not going to talk about that here. Stage 5 is all about risk management, and this is already once you've made your millions. Here you begin to diversify your portfolio beyond stocks and shares, and you can look to real estate and bonds. So, kind of as I already talked about in stage 4, in stage 5, you can start buying some property, you can start buying some assets, once again, as I said, even like hotels. But I would say that that's more sort of stage 6, where it's like now you really have some proper, real fun money to play around with. But I'll tell you one interesting thing, even bonds. I had zero interest. I didn't even look at bonds until I had at least an 8-figure investment portfolio, and even at that point, it was still a couple of years until I invested in bonds. It was only once bonds were yielding 5, 6, sometimes even 6.5% depending on their rating. But I can tell you that in October, November of 2023, I bought a crazy amount of bonds. And if you told the version of me that was in stage 4 investing, oh, you'll be investing into bonds, my opinion was always like, oh, that's so boring, why would I do that? And that's because in stage 5, a lot of it is risk management, making sure you preserve your wealth, making sure that you have some riskier plays, but you also have some defensive plays. And to me, bonds are always a defensive play. It's always like, okay, let's make sure what we have here is safe. So, ladies and gentlemen, I gave you some beginner concepts, and I even gave you some of my personal experience a little bit further down the line, so you can kind of see where this journey might take you and where you can end up as an investor. But all that to say that, whatever stage you're in, investing should always be your thing on the side. Even at this stage of life where I make millions a year just from my investments alone, that will never ever be as much a priority as my businesses, as my companies, and ever be as important as it is investing in myself, because I know I am my #1 asset. All this other can get taken away, trust me, but you, as a person, that is the biggest asset that you have. So always invest into that. So on that note, I hope you enjoyed it, and as always, I'll be watching from afar, and I'll be rooting for you.